Alright, good evening. So, yeah, this has not been the best trading day for me. Just too much in my mind and was not walking away from the charts properly. So, but it is the name of the game and we gotta keep moving forward. So this is gonna be a kind of review / breakdown on what I did wrong and what I should have kept doing, and at the same time understanding where we are pushing towards too. So we're starting off with GU. We were on this bearish bias, and seeing around this support area could have been a little bit confusing, but we maintained lower high points that we could also see on H4. So we were still basing structure off of H1, and this was its first lower high point. And we were stating that it was a break, retest, and enter. So, this is where I was messing up, to where I kind of entered on an impulse, and I got stopped out. And from there, I kept on just stupidly changing my bias after this minor break right here, instead of stepping back and realizing this was just a 23.6% area. I could have drew my fibs properly, realized that this was a retrace again, and held this bias because it never really broke. Even right in here, it first broke a level of support, lower low, lower high. This was its official really lower high point. We don't really see, we see it, but not really on these lower time frames. We more or less see that. And yeah, so it is what it is. It is the name of the game. Yeah, I had multiple areas to be able to re-enter, so this could have been one. This area, just simply finding resistance. This area as well, just because it is a lower high point. So after the break of this level of support, drawing fibs either from here to here, whichever. Yes, this really would not have been one. This would have been it, and you could have just been on M5, waiting for a break of a level of support, just because it was a steeper retrace. And in this time frame, see the fact that all that was 23.6%. Right? This was the lower high point, and the retest of this trend line opportunity, this counter trend line opportunity, and enter right there, and your stop loss would have been right there, which would have been 10 pips. And almost instantly into profit. If you're basing it off of just M15 type TPs, 20 pips, 30 pips, or we could have still been aiming for that negative 27%. So yeah, I back tested, see what I did wrong, corrected myself. Now I just have to wait. Probably not going to trade tomorrow, just because of my state of mind from these losses and shitty trading style that I performed today. Going on to GEJ. So similar situation. We were making all these lower high points that I marked off right here. And for H1, now technically never really broke structure. This was a test. M30 did though. You can see a 1-2 candle. So we went ahead and had our fibs right here. Now, GJ likes to get like pushy and sloppy. So, like I was stating that, in the video where I entered in here and I just got stopped out, because this was its first real break, and then we drew our fibs here. So with this area, could have drawn our fibs from A to B, realized that all that was 23.6%. This would have been where, for me personally, would have got a bit hard, because we are seeing a lot of exhaustion at that level of support. So yeah, this was a bit difficult. Now, what I should have done is realize that, okay, it never really broke M15 structure at all yet. It did break a level of support, yes, but it did not break structure overall. So I could have realized that, even seen on M30. Oh, sorry. Again, it was breaking strong levels of support, right? We were seeing all this exhaustion, all this breaking right here of minor levels of support. Again, this just was a complete tested area, even though, yes, it was making lower high points. It maintained that level of resistance, broke down, and we are almost at its first TP area. So, like I said, name of the game. It is what it is. AU was being very, very, very impatient. Mostly because I did take that loss, and I thought this was a easy setup because it was respecting a previous level of support. Oops, I don't know where that came from. I don't even know where that color came from. Alright. So yeah, it was respecting a previous level of support. So, but just because it was respecting it, we didn't have any type of cross of the SMA and E main. This was all a consolidation. We saw that on H4, and it never broke a level of support, even on M15. All it did was maintain one area, made price keep on going higher and higher and higher, broke out, and maintained this uptrend structure. So now we'll see what happens now. That doesn't necessarily mean my overall bias has changed. I'm still pretty bearish on it. And we do seem like we are really at this lower high point that it's been respecting with this trend line. So, I mean, we do have a break right here. So this was one lower high point. I believe this was a 23.6%. Yeah. So, yeah, we did break it. So we could just switch up our fibs. I'll call that more like 23. Yeah, we really don't see it. So all of this has been 23. So we are looking for a nice retrace to at least 38.2%, which we could possibly get based off of these candlestick analysis. Like, it is starting to slow down. We even have like a morning star type of formation here that we can see on H4. And we do just have a simple break of a level of support. Very minor. We don't really see it on these higher time frames, but that also explains this morning star type candlestick pattern. So yeah, we are looking for a retrace of this area, and our main goal is still at negative 27%. And this area, mostly this, I would say this area of support based off of this daily time frame, and this 38, which is around this 38.2% area. Alright, and yeah, we even see the fact that, yeah, it broke past, which was these 1-2 candles, and then US30. So, kind of was getting ahead of myself. We did state that we are going to stick to this main bias of this downtrend, because technically this has not broken yet, even though yes, we are at 23.6%. So we need at least a lower high point on H4. So in the meantime, we are still on this bearish bias. We're having a breaks of all these levels of support right in here, all these minor levels. We can draw our fibs from A to B, right, for M30. Right, we see the fact that it retraced to 88.6%, so it's a steeper retrace. It started now because this is M30. We can use, I would say possibly even M5. So this isn't necessarily a break of structure, but it is a break of support, which we can see on a higher time frames. So break right here. It was also making a lower high point as well. So fibs A to B retrace to 678.6%. 1, 2, 3, enter. Stop loss off here. Take profit. I would say is still based off of at least M30 right now, simply because this is a very steep retrace. So yes, we are aiming for negative 27%, which does have some confluence around, I believe that is 38.2%. Right. But again, just because of all these long wick areas and disrespect to this 23.6% area, we are being cautious with it. So I would say first, let's aim for that negative 27% based off of M30. Even though, yes, this was a long wick, we don't see that exhaustion on two different time frames. Like, yeah, that long wick was, yes, there's still exhaustion, but there's also a break right here too. So, yeah, a couple lessons we can definitely learn from my mistakes. 1, stop being freaking impatient and looking for reversals. And then 2, just because it is breaking minor levels of resistance for a downtrend does not necessarily mean the downtrend has ended. It just means a steeper retrace. Alright. And then 2, just gotta be patient. Like, this was all because of impatience. Like, just trying to make a quick buck. So, let's learn from my mistakes. I need to learn from my mistakes. And, let's get after it. So, let's have a good evening. And we'll break all this down in the morning. Good night.